Well, hello everybody. Welcome to Friday. The S&P 500 actually ended up today, but just barely, 0.05%. Not much of a gain for the day. It was a bit of a roller coaster. So far for most of this recovery, wherever it started off in the morning, it kind of ended up. If it was going up, it went up. If it was going down. In this little time frame that we've been in here now, we've been a lot more roller coaster ride. So we were up this morning, and then we fell, and then we ended up rallying at the end. But one key thing is that when we did fall, we fell back down to the support level that was established back in July. We've hit that a couple times here this month. It's been holding up very well, and there's been some pretty strong movement off of that point. So there's buyers coming in at that point right now. And so that's really important to understand. And generally speaking, these markets, they have these big runs, and then there's some selling that happens, kind of creates a little psychological damage, and the markets don't come back really fast. If you remember June, all right, so June 9th was kind of a high at that point in time, and then June 11th, the market dropped almost 6%. Well, it took until the 30th before the market started to move again, but when it did, we ended up with July and August where it went up almost every single day, and we had a really good run during the summer. So now we're a couple months later, we're kind of doing the same thing. And if we are going to have another run, this would be a normal process to have this up and down kind of churning. And so if you can kind of, turn it off in terms of worrying about it, I think, that works. Now, that churning could turn into, a downturn and a reversal of direction, and we'd have to watch for that and be careful of that and deal with that. But that's not happening yet. Right now, all we're looking at is exactly the same thing that happened in June so far. And so again, if we're going to have a nice run up, you kind of need these sideways churning motions. Volatility is up. There's a thing called the VIX, which is a volatility indicator. It's up. And so expect some more volatility here just to be part of this process. We do have the presidential election and the stimulus package. There's all kinds of news that's happening, but volatility is, a normal part of this process and this churning and whatnot too. So we've got the Federal Reserve helping, we've got zero interest rates, we've got home building taking off, which is a huge deal. We have, the right stocks in our portfolio at this point in time that are making money. They're involved in the right areas. So I think that things are okay here. And I want to make sure that everybody feels pretty comfortable and you have a good weekend, and let's see what happens next Monday. And I will talk to you then. Thank you very much.